Fenton.
Witten, a late start to the year. Here we are. It's March already.
Made an early late start. Well, mate, I think for many people that I've been hanging around with and having a chat to, I've been calling it the great false start, mate, to 2022. We've had nearly everyone in our team get the Rona. Then of recent times get affected by the floods. You name it. It's been pretty interesting. So, mate, what do they say? Long time between drinks, a lot of water under the bridge, literally.
Yes. Yes.
Yeah. So, yeah, mate, great to see you.
Good to see you, mate. Good to see everybody. Nobody knows that we're here, so it's going to be really interesting to see who comes on. We haven't advertised it. We haven't even talked about it. We thought we'd just sneakily warm into it and maybe give ourselves a little bit of a chance.
See what's going on. Well, there we go. Alison. Oh, Alison's down there. We go. Oh, the boys are back. There's Harry. Over the bridge. Well, that's true. Facebook user must be one of the people out of the groups, but yeah, a lot of water over the bridge. That's for sure, Andy.
Yeah. Mate, well, mate, we were, for those of you who don't know, is up in Kingscliff over the last for the beginning of the week, so Sunday. So every time I have gone to northern New South Wales or Queensland over the last 2 years since Corona started, mate, every single time I've come up your neck of the woods, the weather has been absolutely horrific, and this time it really stepped it up a notch. I think that you're trying to keep me out, and well, I understand why.
Others would say that you're bringing it from Melbourne. That's what others would say, but.
Well, I do know that you're coming down south, mate, and I did look at the weather over the weekend when we're going to be lucky enough to have you down Melbourne town, and it's missing rain, and it's been beautiful, 27 degrees until you Queenslanders come down here and decide to bring the weather with you. But I know that Andy can't take a hint. That's exactly right, Harry. I keep on trying to get up to the Sunshine Coast. It just puts on the opposite, going, no, it's not for you, mate. The Sunshine Coast isn't for everyone.
Mate, well, I tell you, that's probably one of the things that I'll touch base on today with what's in the news, but probably a little bit of overview for us all at Wine and Wisdom, mate. But yeah, there's a lot of people shifting around in Australia. But a quick shout out to everyone: Harry, Jeff, Alison. Good to see you guys. There's about 30 on now, which is awesome. Give us a shout out in the chat. Who's here? Great to see you guys. What are you drinking today, mate? This is a fresh bottle. It's quite fancy. Yeah. Pinot Noir.
Let's see how many weeks of Wine and Wisdom you can take this one through without falling off the perch.
Damien, how are you, mate? Good to see you, Damien. Thanks for joining us. Yeah, listen, I'm not a big wine drinker, folks. Actually, this is the first glass of wine that I've had in weeks, I think maybe even a month, Andy. So it's good to have a drop with you, mate. And talk a little bit about what's going on.
The old Point Leo estate is down here. Geez, I reckon they should start giving it to me for free the amount of times I've plugged it on this show.
Mount difficulty here. But you and I are going to hang out actually on Sunday night and have another glass of wine in person, which I'm looking forward to. But 100%. Yeah. Well, why don't we kick the show off and maybe just talk through the general gist of things as we usually do. Folks, welcome. Andy Fenton over there. Jason Witten over here. But anyone who's there's Nigel joining us for the first live. Had a Shiraz at lunch, listening to Malcolm Turnbull. Well, gee, there's two opposing necks of the woods, isn't it? Sort of from Malcolm Turnbull to Andy and Jason. Well, there you go. We might see what it'll be interesting to see what Malcolm said. Maybe we'll get him on the channel one day, Andy.
Yeah, well, if he wants to tune into some sense, mate, I reckon he'd probably like having a pop at the politicians now.
Well, I tell you what, you and I had a little bit of a theme going last year. We bloody told you so. Like, we've been talking about it for, months, if not years. And it's interesting that a few things are coming home to roost in our neck of the woods, certainly the real estate game. And I'm sure you've got a few of those from your world as well. So, but folks, thanks for joining us. If you haven't been along before or you can't remember because we drank too much wine, last year and we forgot over the break. Yeah, we kicked off Wine and Wisdom to help our respective communities, in my neck of the woods, property investor community, Andy's neck of the woods, business owners and investors in general, like, building their portfolios in other ways as well. And we came together when the old Rona hit, and we tried to make some sense of what was happening financially for our clients and customers over a glass of wine at the end of each week, because it was happening so fast, Andy. Folks, it was going quick like that. And so we did our best to keep everyone up to speed, and we actually ended up enjoying it, and we just kept going. And like Jared said, we get on the gas on a Friday and have a bit of a chat. But we talk from our respective worlds when it comes to the property world, the world of finance and the economy. And, we try and debrief the week, basically, folks. So welcome to all of you, and great to have you on. We do it in 3 parts, folks. I've got a little something here for us, Andy. We can, have a little look. Might put you down there in the corner. They say don't put baby in the corner, but I had to put you in the corner, Andy.
It's all right, mate. I'm used to being down here. Look at you all the way up there.
That's just how it worked out today, mate. But how we roll, folks, is we do it in 3 pieces. We do a little bit of a debrief on what's in the news. And as we're doing that, we want you guys to hit us up with any questions that you might have. Anything that you think, hey, listen, Jace, Andy, hey, what about this? What about that? Jeff is sort of shouting out, coal's booming. Europe found out that being woke means going broke. No gas from Russia. They're interesting times, that is for sure. This just in, face masks out and bomb shelters in. There's a lot happening, Jeff, out there, folks. And certainly we need to understand what that might mean to our finances and our assets and our dollars and cents. So if you got any questions, Andy and I are going to do something, I don't know, big picture for the first little bit. Any questions? We'll also have a little section which is called Things You Should Know. Maybe general knowledge. Maybe you already know it. Maybe you don't. Andy and I think we might need to communicate something that we've come across or we're thinking. So that's usually how it rolls, folks. We usually spend about 45 minutes having a good yarn, sometimes even longer, and hopefully add some value in some way to your Friday afternoon, Andy. And
maybe we should call that last section maybe uncommon sense.
Uncommon sense, yeah. That's not a bad one.
But please, guys, girls, ladies, gents, make sure that you drop some questions in, because right now we were hoping to start this year on maybe a lot more positive front, because we did have a section that Jason and I were preparing to do with everything that we said that came right. We were going to go with everything that we said that went wrong, but it just wasn't enough to fill the full 45 minutes, quite frankly. But we thought we won't gloat. What we'll do is we'll have this little session. We didn't promote it, so it'd be great to know what's on your minds, because I know through my clients, through my circles, we've had the corona. Now we're into this, a period of tension that's happening over in Europe. People are not quite sure. I've had people who are thinking the world's going to implode. Then we've got the floods that are happening out here, and a big shout out to everybody that is affected by that. If there's anything that you need that we can use our resources to try and help you with, whether that is subsidies, whether it's, whatever it is, especially in the world of small business, property, investing, please let us know what it is. We mightn't know it right now, but I promise you we'll put our collective brains trust together and find that out for you. So if you've got friends, send them this way. If they've got questions, find out what they are. If they can't be here, front the questions for them, because the more that you let us know what you're wondering about, the better chance we've got of being able to answer you. Otherwise, we'll just continue on with what we think you should unlearn from the common press, and develop some perhaps different perspectives, which is hopefully what we think is maybe a more balanced one.
Yeah, mate. What I got here, like this one here, Alison's saying someone's been playing Jumanji, pandemics, wars, floods. What's next? Well, yeah. Well,
I'm waiting for the 4 horsemen and the apocalypse. I reckon at the moment it really is. It's one blow from another. And if anybody's into that rendering of Elon Musk's theory around we're hurtling through space right now in a guided simulation, you'd probably be going, yeah, I reckon that's probably about right, wouldn't you?
Mate, I tell you. Well, mate, I thought what we might do. I've got a couple of things just to maybe kick us off, maybe in the news and have a little look at what's going on. But mate, in my neck of the woods, it's been pretty interesting times. Pulled a couple of articles, and a few of these are, a few weeks old. I was just collecting them for the kickoff of Wine and Wisdom, but
It almost seems like a sponsored commercial for the Financial Review. Just quick disclaimer: we're not we're not being paid.
I find the Fin Review the less dramatic of the headlines of all the newspapers. But
you'd say that because I was starting to read The Sun from the UK because I reckon that was probably one of the top shelf newspapers from last year.
There you go. Well, Michael's got a question, and certainly I'll get around to that one, Michael. In my little sections, about the property market and some of those effects. I think there'll be secondary effects, not necessarily direct effects, but and that'll come through. I think potentially some economic stuff. Andy's probably got that on his radar to have a bit of a chat about as well. So, yeah, for sure. But folks, listen, the property world is in pretty good shape if you're an investor. Not such good shape if you're not. If you're not in the market, then you're not benefiting from what's going on. More jobs, surging house prices, record stock values, rising inflation, $1 trillion debt. It's been a crazy. Now add floods and wars to that. I think that's about 2 weeks old. That one, that article. It's 2022 was certainly far. The last 2 years, far from what anyone would have thought or predicted. But what's already happening out there, Andy? Folks listening in. We've got a little bit of this rubbish creeping in. You guys have seen Andy and I talk about this many times. The 15 to 25% fall in house prices. What absolute rubbish. Absolute rubbish. Now, for that to happen, the world literally has to end, right? We had the biggest global financial crisis ever in the world's history, and the average house price in Australia adjusted about 7%. And that's just rubbish,
Aren't they meant to put opinion piece when it's an opinion piece at the beginning of the article? Aren't they meant to put it in brackets?
Dead bloody right. They're meant to have opinion up there. And this is the thing that shits me and Andy. We get the shits with this rubbish. This is just absolute, just hideous reporting. There's no metrics behind this comment. I can tell you right now, folks, you guys have been listening into my morning chats. The actual reality of the on-the-ground situation with supply and rent are in dire, an absolute disaster. And that's not dramatic. It's a disaster what's happening in our property world when it comes to supply. I won't ask too long on this one, but
go for your life,
bullshit.
Wax lyrical.
Absolute rubbish. So ignore it, folks. There may be some pressures. Shane's saying I sound a bit like Andy.
A little bit broken up, but I just thought you were going into binary form as we were passing Venus through the simulated life that we're living. But apparently, Josh can hear you loud and clear, mate. Not very clear from Alison, so it depends on where you're coming from in the world, by the sounds of things.
Well, let me do this. Let me try this. If that's any better, folks, and see if that's coming through any better for you, Andy.
Mate, I can hear that. It's the dulcet, silky smooth tunes of one of the world's best rock climbing commentators.
There you go. All right. Well, hopefully, okay. Yep, a few updates.
Jeff thought he'd finished the bottle.
That's funny. Well, anyway, thankfully, you didn't miss too much. I was just saying that, this stuff is rubbish, folks. Ignore it. I've seen in 4 or 5 articles like this, an absolute bunch of trash. It's actually very self-serving, Andy, and this type of commentary is actually very self-serving for the banks, and for people rushing off and trying to lock in interest rates and all sorts of things. But we won't go there today. I'll make sure we do something about that. Just be careful of who is putting out this troll, rubbish, these trolls online trying to get you to do something. So that's there. That's interesting. I wouldn't mind talking about this one a bit later, actually. I think this one will be interesting for you, Andy. The government's coming for some of the dough. They've got trillions and trillions of debt. They're going to try and find somewhere to grab some money from us. Maybe we can park that one. I'll finish off my real estate stuff. Folks, one thing that's happening right now, and it's already underway, the borders are open, tourism and also other visas are happening. 200,000 plus people to enter the country, and also another 200,000 next year, and so on. That is going to accelerate some of the challenges we've got in our world of rental issues, rental problems. So keep an eye on that one. That one for me is like the what would I call it, Andy? The silver bullet, but in the reverse, right? And there's so many jobs around. There's a labor shortage going on, and we need to have those people come in. So,
great tsunami. It's going to be this will be the next one, mate. It'll be very, very, very interesting as this starts to come online, and we'll talk a little bit later as to the reasons why this is. I think that's the theme of the year at the moment, is the false start.
Yeah.
Because this would actually be almost at full momentum, and the war that's happening at the moment may actually just make this delay a little bit longer, but ultimately the wave is coming 100%, and we'll get into that in a little bit.
It could take the heat out of that momentum for sure, but there's a need all round in the country for more people. There's plenty of jobs. I saw some stats, Andy. Australians have got the highest level of cash savings we've had in history, or something like that. There is the value of people's real estate went up a couple of $1 trillion, went from 9 trillion to 11 trillion. We're wealthier than we were 2 years ago. We've got more cash than we've had 2 years ago in Australia. For the first time in a decade, our wages are slowly but surely going up. Hopefully that's not just localized. Hopefully that is a bit of a trend that's good for everybody, and hopefully that flows through. So I think there's some soft landings, if not neutral, if not continued growth landings for real estate when it comes to there. But this war issue, for me, there might be something in and around that, that might accelerate some things short term. But we need to keep an eye on those.
I love this. Jeff's just put in here. I've got mates saying property will crash. I said massive shortage of quality property, massive immigration started, massive rental shortages. Yep, holy crap, massive demand. Oh my God, it's going to crash.
Yeah.
Right, Jeff, love it.
Well, and that's it. It's an interesting one. The lack of understanding when it comes to this stuff. Right now, I did this one this morning, Andy, but I won't take too long on there, and I'm going to hand over to you in a sec. But, the vacancy rates in Australia right now in our cities is just crazy. It's like, check this out. Like, the national vacancy rate is 1.1% across the whole country.
Right. You called this 2 years ago.
2 years ago. And it started before COVID, Andy. And COVID's just accelerated this. It's been a problem for a while. Melbourne and Sydney were a little bit higher because of inner city dwelling apartments and lots of students leaving the country.
Well, mate, we weren't allowed in there, and we're only just going for the no mask mandate now. And we'll probably get into that a little bit later on as well. But there's been political reasons why in Melbourne a lot of that has been curtailed, which is actually potentially an exciting opportunity, I'd say. But we'll see. I'll get your opinion on that one.
Mate, you're dead right, mate. You took the words right out of my mouth. We've been shouting that one from the treetops. Melbourne is undervalued because it had a not normal. It wasn't normal market led constrictions and rental issues, right? So those who were a little bit unsure about the Melbourne market kind of drew back. The rents were low. It was smashed by the lockdowns, and people sort of literally went north to Queensland. And so it's kind of, Brisbane and a few other markets are red hot, and Melbourne was lukewarm when it came to, the rental yield. But it's the one. It's going to come home strong, and we've been investing in the short term in Melbourne significantly with our team, with our crew, because we think it's undervalued. But if you have a look at the change, in basically 13 months, Andy, across here, Melbourne's change is significant. Look at the pace it travelled at, between there and there, mate.
Mate, you would say that's 100% or 50%, the biggest drop on record. You'd almost say if you put that on the front of the Fin Review.
Maybe we should go into the news business, Andy.
Well, so, mate, you know who these statistics are scariest for? Well, yeah, you're still there. I reckon these statistics are the most scary for empty nesters or the wanting to be empty nesters, because ultimately you can't kick them out if they're not going to go anywhere. I mean, where have they got to go?
And this is the thing. Should I stay on that market peaking? Well, where are you going to go? Where are you going to go? Now entering, I'm calling it again, Andy. Maybe we should take another call. We're entering the next 3 to 5 years is going to be an insane rental boom. Now, I think if the interest rates go up, it'll cool the heels of capital growth. Always does. But rental boom right now, we don't have anything in the country. The rents have been compressed along with the interest rates for quite a long time. The rent growth has actually been very low. Your net cash flow has actually gone up, but your gross rent has not. If you follow the sort of, because interest rates have gone down, your net cash in your pocket has actually improved, but your rent hasn't grown. Your gross rent hasn't grown as well as it normally would, because interest rates went down. So that everyone was winning, like property investors were winning. But we are now on the cusp of a rent boom. Like under things being so low, in our marketplace when it comes to the vacancy rates. Under 1% there's nothing to rent, Andy. There's nothing. There's and if it is, it's rubbish and no one wants it. Like, this is where we're at, folks. So, trying to do a big catch up conversation, which is basically for all of us when it comes to property investing and being property investors, and what's going on, Andy. The marketplace is in all sorts. If you're in the driver's seat and you can get access to the right deal, buy some good quality stuff, and make sure your finance position is pretty strong, then you're going to be in a pretty tidy position when it comes to your property portfolio, your property stuff in this next 2 to 5 years. I think it's going to take 3 to 5 years to rectify this problem. If that, because the government is so far behind, it's not funny. So,
well, mate, you overlay that statistic with this, right? And I've literally just found this. So I didn't even double check to make sure that it was actually Australia. It's actually not, but ours isn't too much different. But so this is very similar to what our demographic curve is. And so less about the numbers, more about the shape, because they're quite similar. So if you overlaid this with the statistics that you're showing, so you look at the 20...
Put yourself up in the other corner, Andy. Put yourself in another corner.
Sorry, mate.
there you go, mate.
Oh, I was over the top of it. I was underneath you, Jace. I was there. Look, you can see me behind
where did he go?
I'm trying to get out, but I'm always in your shadow. So this is very similar to our demographic curve as well. Like they look similar. So what I'm referring to here is really this market here, right, is coming on. Everybody here is either in their own property or renting or in a nursing home or a retirement village. Everybody there is already in some way, shape or form in the market. Right. And the problem is that when we go up to the top and we start going, well, who's coming out as to who's coming in, there's a big gap. Does that make sense?
Massive. Yeah, absolutely.
So what that means is that there's more people coming in than what are actually going out. And unfortunately, in these terms, when I say coming in versus going out, I'm actually talking about, people leaving the planet and, moving on to the next stage of, whatever that looks like to you. But ultimately, with those statistics that you've got, as those people go to move out, they're not going to move it. They can't. Or where are they going to go? Because the percentage, and maybe what we'll do is we'll get one of, maybe we should get one of my economists to liaise with one of yours and start to put these bubbles over the top and see what sort of pressure that's going to put on the housing market here in Australia while that happens. Because, mate, that's an astounding statistic. Less than 1% across the country, 1% across the country and less than 1% in some of the major states. That's scary.
Mate, and I'm calling it right now. Sydney and Melbourne are already under 1%. They're already under 1%. We'll see that. We'll see those results come out, in April for March. That's going to happen. You're going to have your first tranche of people who've got their student visas. They land in Melbourne, by the way. That 80 to 90% of first entry point is Melbourne. Right now, Airbnb and short-term letting is back on the menu, and you will see between 5,000 and 8,000 rental properties leave the market over the next 12 months and go back to short-term letting. So there's these accelerators that are just going to just make things it's going to be just crazy. It's gonna be mad. So,
well, you and I have been talking about arbitrage ever since we started this, and we've been talking about potentially bringing different products to the market around, I guess what we'd call the holiday to permanent rental arbitrage. Which is ultimately the difference between, if you've got a place that's in a desirable location, the difference between renting and the difference between Airbnb-ing it out. Yeah. And I think it'll be interesting to see what actually happens from that perspective, because as you rightly said, if those properties leave the market, then that statistic should plummet, because then if there's 20,000, that's 20,000 that are taken off the shelf, which are no longer permanent residency and then go to part-time residency.
Yeah, and what happened in COVID, when COVID hit, the short-term letting sort of was on the nose. People said, oh, listen, it's not happening. I'm going to put it back in the pool, which temporarily provided some stock in certain places, and kind of maybe even gave a bit of false sense of, supply to the marketplace. But, if you look, folks, if you want to check this out, SQM Research, great little website, SQM Research, you can go in there and you go search any suburb. Andy, I've got a property in Collingwood in Melbourne. The Collingwood vacancy rate 1 kilometre from the CBD is 0.4%. So it's under 1% already. Every single suburb surrounding the CBD is under 1%. Where you live, mate, there's nothing to rent. There's like 3 houses in 5,000.
I've got a couple of teepees that I'm pitching out the back of the property at the moment.
You could probably crush it. But this is where we're at with that marketplace. So it's certainly for all of us in the driving seat. And folks, what's the upside of mainstream media talking rubbish, talking smack about the property market? Well, folks, when you know some stats and some good data, you can continue your acquisition process to build your portfolio confidently And yep, I don't think we're going to see massive growth like we have in the last 2 years, Andy. But what I think we'll see medium to slow growth. But I think we're going to see huge, massive booms in rental. And at the end of the day, hey, I'm happy to take a $200, $300 increase in my rent every day of the week. So away we go. So that's what I'm calling. And over the next 2 to 3 years, I reckon that's going to come home to roost. But unfortunately, we've got headwind after headwind, Andy, in economic terms over in your neck of the woods. So mate, what do you got for the listeners today?
Mate, well, a little bit of lighthearted stuff with this time
not in the news.
What's not in the news, and thankfully enough, COVID.
Yeah, well, there you go.
Didn't that disappear quickly from the headlines?
Yeah.
Didn't it just absolutely disappear? So I'm not going to jump into the unicorn conspiracy theories here, but it's actually quite nice to switch on the television from time to time and not hear about it. But it's amazing how quickly that's gone down. And all of the policies that were put in place. And the reason why I say this is not to be contentious and not to minimize the destruction that it's caused, but more to bring light to the political agendas that sit in and around the publicity of this stuff. And again, I'm going to be probably more careful than I ever have, given because there's a lot of stuff going on.
Yeah.
But I think we can all agree here that not having these two Muppets in the news on a day-to-day basis is an absolute blessing. I just feel a little bit happier
relieved.
every day that somebody has taken the oxygen away from these oxygen thieves. And mate, it's just a brilliant day. They're not even on the hot breakfast in the morning because the hot breakfast doesn't exist. And Marty Shegold won't have these buggers on the show, I can tell you that. So it's been absolutely wonderful not having to listen to this garbage spilled out by them on a day-to-day basis. So what's in the news? Novid. What's in the news is unfortunately this bloke who, I don't know, mate. It may just be me, but I would prefer it if he kept the mask on. When there's people with nuclear weapons that are sitting in around about the 6,000 of the bastards, I'm pretty sure that we're in range still. Maybe you should keep your mouth shut and just let us get along. We're 2% of the global GDP, so maybe just be the quiet cousin that ends hell, lends a lending hand. But obviously ScoMo wants to have a pop at China and Russia because quite clearly our army's bigger than both of theirs. This is the main thing, mate. I have never seen I've been trawling the media over the last couple of days, and I have not seen as many opinion pieces as what I have right now. And I get what we're talking about is to a degree our take in the world, but at least we're backing it up with some bloody statistics.
Yeah.
Like the stuff that's out there is fairly dangerous at the moment. And I've had clients ring in and worried about markets getting terminated by what's happening over in the Ukraine. And I don't want to minimize that. Obviously, it's a horrific thing. It was like a gut punch when I heard what was going on over there. It's absolutely terrible. But ultimately, there's a lot of bullshit opinions. And, mate, I was hoping that this year would be a year where we'd get to stabilize. We'd get to maybe have some media sense. But, mate, we're far from it. We are as far down the rabbit hole as far as the media is concerned than we have ever been. And I've got a lot of stuff. I literally couldn't find anything in the news worth talking about because I looked at it and I thought, well, I'm not going to talk about the floods right now because it's terrible, right? But there is fear mongering going on about what's happening out there. That in some cases completely not true. There's a lot of fear mongering going on about what's happening over in Ukraine, and it's simply just it's misinformed, misguided, or labelled as an opinion piece. And so look. If we go into things you should know about, I've got a whole lot of stuff in here to talk to what do markets look like during wartime? What's good to invest in? Does it go down? Has it gone down? In the last, 300 years of wars, what has been the average sort of turnout of the conditions? And we'll go into that in a moment. But unfortunately, we're now into opinion pieces where people are starting to become war experts and understand what's happening geopolitically in the world, and based off their assumptions they're making calls as to what's happening in markets out here. And mate, unfortunately, it's even worse. It's even worse than a pandemic, because now these idiots actually think that they're the old gold and oil Bob's talking about. But now these idiots actually think that, now that it's not a pandemic, it's actually in our hitting zone, because we know about war. We know about this stuff, and quite, mate, I'm frightened by some of the stuff that I've seen, and happy to share some statistics. I've got inflation in here. I've got economics through war times. I've got rising interest rates. Let's put the gloves on, mate, and have a chat about it, because I'll tell you what's in the news is absolute BS. And it was Yogi Berra who said it best: the future ain't what it used to be. And the politicians are kind of pumping the tires of where they think it should have been, but it ain't going to be there. So, mate, this is an interesting.
What are we looking at here, Andy? You might have to zoom in and show us a little bit. You have to talk us through it.
So, mate, effectively just over here, have a look at the date. So let's have a look at the target sample. Since 1991, this is what we're looking at. We're looking at multiple different markets. We're looking at the US shares, right, in the green. We're looking at Australian in the orange, not too far behind. Right, we're looking at Australian property, Australian listed property.
Listed property, which means development companies, big commercial, industrial, logistics, stuff like that. Yep.
100%. So we're actually looking. What I wanted to bring this out for is to actually have a look, because I have had a lot of people actually really scared about markets from a wartime perspective. So if we have a look at the second Iraq War, and we have a look at what was the average trajectory of investments over that period of time, we then even go to what is an interesting one here, the Gulf Mexico oil spill. Right, so this was an interesting one from an oil perspective, which we'll get into a little bit later, but ultimately short period of time. The major market downturns over this period of time. So if we just zoom back out and you go, what's the most dangerous times there?
Yep.
Right, you're clearly going to go to here. Right, you're clearly going to go to here, and to a lesser extent, you're going to go here. Right, and when we zip back and have a look, well, look at this. This was when they brought in GST.
Yeah. Yeah. Who's the most dangerous? The bloody politicians.
Jace, what I can't see in here is where they repealed the property taxes. Like when they brought the GST in, they were meant to get rid of stamp duty. I'm not sure. Am I missing it on the chart, mate, or did that just never happen? I'm not a great historian.
Well, Andy, that is the sore point for all property investors. They were meant to get rid of stamp duty. Yeah, but it never disappeared after GST. There you go. No, well, we don't need stamp duty anymore because GST is a state-based tax. There you go, folks. We can replace the stamp duty. What a bunch of rubbish.
100%. But so if I change gears just a little bit, right, and I go, well, what's the real things that cause these major market meltdowns? They're financial. They're not war-based, right? So we've got .com, we've got the GFC, right? And these are the periods of times that the only one of recent times that really had a big impact here was COVID, right? But again, nothing to do with war. Now, depending on how far we go back, and I've got some inflation statistics that I can overlay, this is a really interesting one. Andrew's
got a complaint for you. He's really disappointed when you present a logical argument based on some facts, mate.
It's just not newsworthy, is it? It's absolutely not newsworthy. And when would that ever happen? Gosh, when I have to start actually being real, Jesus, it means the world's really going under. So I did some research, looked at crisis events in the US share market. It's always easier to go to the US, right? And so that says crisis of. I'll just move my head out of the way for a moment. Crisis events and the US share market. The reason why we always go to the US is it's that they've got a bigger data set, right?
Yeah.
We're 2% and haven't been as developed for as long, so we always go to the US for for having a look at, what markets are doing. So we've literally got all of the major share market events, all of the major wars, everything from 1940, right? From Pearl Harbor, back, the market fell 6.5%. The first 3 months, it was negative 2.9%. And a year later, 5.4%, not a bad year.
Yeah.
We go to the Cuban Missile Crisis, which would probably be, as far as this war is concerned, probably the closest from a geopolitical standpoint. And so if I go Cuban Missile Crisis, I go here. Now, I'm not relating the two together, but as far as the reasons why this is actually happening, and for those of you, I'm not going to start to become a war expert by any stretch of the imagination. If you want to, you've got a few thousand Muppets who pretend like they know everything about it. Just turn on any one of the channels, right? But let's have a look at that. This, in my opinion, this is probably one of the more closely correlated incidents globally that relates. So, it actually didn't fall at all, 1.1%, and it's a cracker, mate, 30%. It's a great market year. We've got JFK assassination. He was worth 24% on the US market. So clearly the market actually didn't like him that much. Everyone else loved JFK, but the market didn't like him that much. When we go, and here's the thing, when we go to have a look at the negative years, right, in markets, most of you wouldn't even know what these events are, right? So even when we go to COVID, we had a big 31% fall, but look at the back of that, 40. Oops, sorry, that's behind your head, Jace. But let me see if I can bring this out. COVID fall, 31%, 74% on the back end.
Oh, gee.
Right, so we do then have Bear Stearns collapse, but again, that was financial, not geopolitical or war-based. We have Kuwait up there, Iraq invades Kuwait.
Where's the GFC in there, Andy?
Right, the GFC, where are I to? I'm not sure if it's on this one. It must be. Where are I to? 2, 3, 4, 8. They've left off the GFC because I must have left off the GFC because it didn't illustrate my point, Jace.
That's is that called cherry picking?
Mate, I didn't put this together. I actually sourced it, but it actually doesn't have it in there. So clearly they had an agenda as well. But this was also an interesting some more data. This was from LPL research on the S&P Dow Jones, so the US exchange, right? So I had a look at major shock events. So we've got in there again the Pearl Harbor attack. We've got Iraq and Kuwait. We've got the Boston bombings, so on and so forth. So we've got some of the major events that actually happened here. What's really interesting is some of the more negative events in the short term. Days to recovery, the largest one in there is 189 days. 189 days, other than Pearl Harbor. I beg your pardon. Pearl Harbor took quite some time to recover.
So we have a little bit of setback, and within 3 to 6 months on average, it's better than it was.
Whoop, sorry, I've just jumped in here. 100%. And then when we look across, because people go, well, Andy, it's different. Small caps to large caps, these, and you're going to hear a lot about this. Small caps will get hammered during this period of time, and capital markets are going to get hammered during this period of time.
Andy, let me ask you a question on that one. Is that just pretend smart people like saying things that they sound like they're clever, and then so they try and confuse the folk? Like, they're small cap, large cap. What the hell does that mean? Is it something we should actually try and learn, or is it just some jargon that
But a little bit from column A, a lot from column A, and a little bit from column B. There are times where you want to go to safety into the bigger end of town.
Yeah.
And then there are times where you want to go for the smaller caps, because and small caps absolutely dominated through COVID. They absolutely crushed it because smaller valued companies as they grow and as they take market share, quite often take significantly larger amounts of market share. So small caps are significantly more volatile, right? But ultimately, what is good business is good business. And what happens in markets is that sometimes at where we sit at the moment, which is very much in a growth market that we've been in now for I can't even remember the last time we were in a value market. And growth market means companies that are just growth focused, growth at all costs, tech stocks, all of these sorts of things. So they have been the big winners. But when they fall, right, then quite often what happens with companies with good cash flows, they start to really become the darling buds, because when there's no more growth left in the story, people start looking for yield. And I'm assuming it's kind of the same in property.
It's the same in real estate, mate. Yep. It gets to a point where, you can't eat a 2% or a 3% yield. Like, you don't want it coming out of your pocket. So, people start searching out a higher yield.
And so my example for that would be, and correct me if I'm just talking out my ass, Jace, but what I would think would be a good property analogy would be your $4 million pad in Brighton over the beach probably accelerated at a rapid rate of knots when the growth part of the property market is going. But when the value part of the property goes and the growth slows down, that $4 million pad, you're not going to be renting that out at a 5 or a 6% yield, or I wouldn't think you would.
No, you're not. You're not doing it. No.
So all of a sudden, you still got a good property, but it's just going to do nothing, or it's going to sit around for a couple of years. And so that's probably the best analogy that I can give for the growth to the small cap side of the equation. But even then, when you have a look at the statistics between the two, the big differential is the risk. So risk in this in here, so as opposed to large cap, the risk is volatility. So it's how much wobble, in some people's terms, how much the price went up and down, how rapidly it did. The more rapidly,
so that's some sort of rational kind of metric. That's a measurement. Yeah.
100%. It's peak to trough and how much it aggressively goes up and down, right? The more aggressively it goes up and down, the higher the risk or the higher the volatility. So if we look at, between 1926 to 2013, small caps had a significant, almost 30% kind of volatility, which means that if you had $100,000 in, you could go down to 70, or you could go up to 130 in reasonably short periods of time.
Yeah.
Whereas the large caps, you're more like 19% down. So you're more like 80% down to 80% to 120% or thereabouts. Yeah. So, but you can see that the returns across the two have not been not that different over that period of time. But the key thing that I want to chat about is actually this little sucker over here, right? So when we look at the inflation over the various different wars, World War II, the Korean War, Vietnam War, Gulf War, inflation has been higher than where we're used to seeing it now. It is to the high end of where the Federal Reserve and the Reserve Bank like to see it. 2% for the Fed, 4% historically long-term average for RBA. All right, so the inflation has been on the higher side, and so most of the rhetoric that had come from this is, well, higher inflation leads to poorer markets, and this is something which is going to be a really interesting topic over the next 3, 6, 12 months, depending on how long this situation travels. And in Australia, it's going to be magnified quite a lot in the short term because of the floods, right? So we've already had a synthetic magnification of inflation due to supply chains. And we've spoken a lot about this last year. And for those of you, the 30-second summary was goods aren't getting to Australia as quickly. Therefore, more people are wanting the stuff because it's not getting here as quickly. And as a result of that, people can charge higher prices, right? Not as much timber around. It's taking harder to get here. And as a result, people are having to pay more for it.
Yeah, now, and that's flowing like fairly aggressively into the real estate market in Queensland predominantly at the moment. But the rest of the country is not too bad. So, that's quite interesting to look at it in that way, Andy.
Yeah, 100%. And look, we're already going to see it. And I've got some statistics later on if you want to chat with them, but about crude oil prices, because oil prices going up as a result of what's happening over in Ukraine. That's going to punch into a number of different fields. And here's the thing: in market terms, it's actually really positive in a lot of different fields. It's just it mightn't necessarily be positive for the stocks that were doing really well yesterday. And things like wheat prices, they're going to go up. Think about everything that is fueled by gas and fueled by oil. Those sorts of things are then going to become more expensive. But quite often, there's a margin where people are going to be making more on those. And these are the sorts of areas in markets we can look to. And but I might just finish with this one because it sets the tone. We can have a little bit of a yarn. Because a lot of people say, yeah, but Andy, interest rates and markets go down. Interest rates go up, markets go down. That's what they all say. Interest rates go up, markets go down. Well, statistically, the only time that those peanuts have been right have been between 71 and 74.
Oh, mate, they're living in the past, mate. They're living.
Mate, that's a little bit older than what I am. Now, not saying that it can't happen, but statistically, back in 76 to 81, when and this is where you have to look at the big picture.
Yeah.
Right? Because there's so much more going on than just interest rates. And that's what we're going to hear in the media is we're going to hear single-minded, single assumptions, which have grand unicorn hypotheses that sit on the top of them. But when we look and we actually look at the data over this period of time, we go, well, throughout these other periods of rising interest rates, we've actually had rising US markets. So 5% to 20%, we had 68% rising market from understand where are the effects and how is it that we navigate our way. And if you want to be a short-term trader, cool. Let's have a conversation around how you can manage that. But you're going to get caught, man. You are going to get caught.
I think you nailed it right on the head right there. That last little comment. If you're a short-term trader, if you're a good time Charlie, I call them good time Charlies, Andy. Like if you're trying to do this, you're trying to catch the trend and in and out, whatever it might be. That's not a great way to invest. And really, basically every time you show, you've got a few charts. Yeah, you have some short-term 6 months, 9 months at a maximum. But at the time, every single example of those charts, you said, all right, we have an adjustment. But no more than 9 months later, it was at the same or better than it was when the adjustment occurred. Folks, that is the bloody same when it comes to good quality real estate too. It's as an investor, investors are medium to long term. They hold and they buy good quality things. Trading is not what we do. Andy and I aren't traders. We are not good time Charlies in and out of this fucking gig, And
in my gig, mate, the only ones who are the hedge fund boys and the hedge fund girls. And mate, these people, they aim for their 15 to 20%. And as soon as they hit it, they go on holiday for the year because they know they can make money in any market, right? But they're very skilled at what they do, and sometimes they take extraordinary risks in order to get the results that they do. I would say,
and they're playing with other people's money, Andy.
It's other people's money, which makes it easier as well. But
it's not their money, right?
Don't follow that because you don't have the liquidity as well as individual investors. These guys can short and go long, and they can leverage and they can do all of this stuff when the market turns against them. But the one thing I love, Jace, come back onto the screen for a minute. I want to see your face, mate. All of your trading friends, and I've got a few of them, so hopefully you don't come at me in the short term. But and heed this as a warning, because as it changes, unless you're extraordinarily lucky, very, very insightful, it's going to nip you in a place that you didn't actually understand you could get bitten.
Yep.
And it will whack you out as far as before you even knew what was going on. And here's the thing. Here's my big prediction. Over the next 6 months, all those people who have been posting about how successful they've been doing in their trading algorithms and things like that, they're going to go silent. They're going to go silent because all of a sudden we've seen a big dip in volatility, right? Where Facebook, well, that got slammed because of what was going on with Apple, but we saw the FANG index, that got crunched, went back up. We saw the S&P 500, that got crunched, and then they started a war and it went back up. Like literally, it went back up as soon as Ukraine went here. As soon as Ukraine was invaded, it went back up. So did the Australian market. Look at the day, and you go, what? It dove, and the market is predicting the geopolitical stuff so well at the moment. It's well ahead of your average Joe, well priced in. And this is where those people who have been posting, cocktails on beaches for the last couple of years, they're going to go silent, and it happens. This is what happens. They go silent for like 3 or 4 or 5 years, maybe 6 or 7 or 8, sometimes 10 years. Those are great years. That's a great decade when they go silent. Because all of a sudden the markets become a lot more unpredictable, right? And the short-term positions, which can be very, very large swings, very uncomfortable swings, sometimes 20% in a very short period of time, but they correct. Yeah, it's like gambling. You want to jump in? Absolutely, Andrew. It's like gambling. When you want to jump in and out, here's the drill, Andrew. In God, how long have I been in it? 20-something years. I've never met a genius who's never wrong. And I've met some pretty smart cats with thousands of analysts behind them. And these guys still put their hands on their head and go, we're just going to hold over this period of time because we don't know. And here's the thing. When you have an investment manager get up and start telling stories about how bees communicate, then you realize that they've got no fucking idea what's actually happening. And they're just trying to distract you because the answer to the question is, I don't know, but we feel good with our stock selection. And we know that if we trust this fundamental, it's actually going to go through.
Mate, dead bloody right. Dead right. Yeah. It's some of those things, one of the things that impressed me no end many years ago is when I saw some stats and it's from your world, not mine. So I didn't dig as deep as I probably should have, but someone in an S&P 200 or a Vanguard 200 or something like that, and just leaving their money in there for 5 years, beat those geniuses every time. And it might have been longer than 5 years. It might have been 10 years or something like that. But, the average return across that 10-year period, you get the highs and lows, the wins and like hang in there, 30% win, but then a 40% loss or something. And that actually just stuck with me, Andy, for forever. I saw that many years ago, actually over 20 years ago. And I'm like, okay, I'm just going to buy things and keep them. It's like, it's just too much hard work.
It's safer. It's actually safer. It's like, well, and I say this to all of our business clients. It's like, well, let's build a strategy and let's figure out what it is. And in your game, it'd probably be one now, one in a year, one in the next year, whatever the case may be. With mine, it's reasonably large amounts, of whatever's there, but you're transferring it from one to another. And then it's just constant. ABI, always be investing and always just be topping it up over time. And you get in over the peaks and troughs and it's a discipline. It's not even really an art. Then you just want to make sure that you've got people who make sure that you don't get involved in the pyramids, that you don't get involved in and that's the real dangers, is when things are going hot and everyone thinks you can't lose, and then they find out very quickly that you can.
Mate, I think you just said one of the most smartest things I've ever heard you say, bro.
I must be drunk.
It's a discipline. It's not an art. And that's a fucking absolute drop there, folks. If you're listening in, it's an actual discipline. It's a discipline to do the right thing, not be swayed by short-term malarkey and carry on and fears and ignorance and mid-time, whatever it is. It's a discipline to create a strategy and stick with it over the medium to long term. It's a discipline, not an art. Investing, it's a discipline, it's not an art. Dude, I think you just found the title of our next book. We haven't finished our first one yet, but I think we got the next one. Mate,
I've just written
that.
it down, not an art. But here's the reality of it. And as I said, this is what I say to our business owner clients. Once we set the strategy in play, it's your job to make sure that you just keep putting the energy in that gets the energy back, which is energy is revenue, maintain the profit. This we allocate over here. And statistically, I'm on the odds, mate. Every single time I'm on the odds. Yeah. Statistically, I will be right within 1% over a 30-year period. And the statistics have never proven me wrong. Mind you, I've only been in it now for 20 years. But that's the reality of the market. It's going to go up. It's going to go down. It does have its averages. And you got to play the averages, because if you play the large volatility, you're going to get burned. And then it's a matter of just, there's some other bits and pieces to it. There is a little bit of art to it, like as you get a little bit older and you don't have as much money to lose, or you have pockets of money. So, because if you're taking money out of your investments, then you need to be careful. But that's a whole different discussion.
Mate, 1% art, 99% discipline. There we go. Yep. Go hard, stay long. Mate, dead right, John. Mate, I love that, mate. Absolutely. Listen, mate, the time's flown, brother.
Mate, I couldn't believe it.
Mate, it's an hour already. It's 5 p.m. my time and 6 p.m. your time. Folks, we do have a few questions, and maybe I'll just pop one or two up just quickly so we can answer them before we chuff off. But, at the end of the day, for me, there was a question a bit earlier, and I think Mike said, hey, listen, what are our effects? What do you think the effects on the property market? For me, Michael, I think the one thing that we got to keep an eye on is the cost of living for each person in Australia. Now, that cost of living can be the cost of petrol, the cost of food, and your interest that you got to pay on your home. And there we go. Andy's got a little chart there. It may affect the ability for people to borrow, Michael. May affect the ability for people to borrow. And I believe if the ability for people to borrow gets affected, then growth gets affected at the same time. Okay. The liquidity of the access to capital, the access to lending, that's been pretty high on the correlation world for at least 15 or 20 years, Andy.
Yep.
But Michael, I don't think the market will go down in any way, shape, or form because of all those other things I said earlier. The supply chain, where are people going to rent, all sorts of stuff. So I'm not concerned about any, major issues when it comes to, value challenges. But certainly 100%, it will take the heat out of the market if interest rates rise or the cost of living for people in Australia rises by secondary default if there's a war and there's oil shortages and food shortages and stuff like that. But I'm not quite sure that that's actually where we're at right now. Well, we're not there right now, but that's a possibility.
And here's the thing: nobody knows where Ukraine's going right now. No. I've been listening to a lot of commentary. Everyone's sitting on the fence, and as a mate of mine says, when you sit on the fence, you get blisters in your ass.
Or you get a splinter, Andy, if it's a wooden fence.
Sorry, I'm great at butchering sayings, aren't I? Like, Carol will be sitting here going, "You muppet."
What's going on?
But here's the thing: the reason why they're sitting there is that nobody can second guess what's going to happen here. And they're probably one of the smartest bits of commentary that I heard in the recent days, actually sent through Jono, the Rollo, if you're listening,
Rollo
to the clip. And there was a US general that said, not so much about the sanctions. Actually, no, the comment came from someone else, not you, Jono, but I love that video anyway. But the smartest bit of commentary was in and around, it's not the war that's going to create the economic turmoil. It's the sanctions that are going to create the turmoil.
Yeah.
So what is actually right now, what is creating the greatest amount of volatility and turbulence in the market is actually NATO and the US. And it's based on the constraints that they're putting on Russia. Now, again, I'm not talking about what they should or shouldn't do. That's not my gig, and I think all war is terrible. But it's the sanctions that are creating the issues right now, not the war. The war is the stimulus, and maybe my final bit for the day is, and we were saying this a little while ago in Wine and Wisdom, is that first there's currency wars, right? They countries compete against each other by manipulating their currency, and that's the first type of war. And we saw that a little while ago. And then there's trade wars. And we thought we'd seen trade wars a long time ago. We thought we'd seen the beginning of trade wars back when China was barging around a little bit with, produce and our
iron ore, and we're not going to take your meat anymore and whatever. Yeah.
Mate, geez, I tell you what, them not taking our fish has been one of the best things for me, mate. I had lobster at Christmas, and do you know how cheap that thing was? It was unbelievable because they wouldn't take it. Australians have never eaten so well. There's always a flip side. But those trade wars are the things that quite often end up in real wars. Now, I guess from that, when you look historically at the major pressures, and you might say, well, look, they were going to do it anyway, and maybe they would, but the trade, the sanctions are the things that allow political pressures to get to a certain level that it can tip over. But right now, the biggest impact on global markets at the moment is actually the sanctions that are getting put on that are related to what's happening over there, and that is having more impact than the actual war itself.
Yeah, there you go. Well, mate, why don't we give that one? The final say of the first inaugural 2022 Wine and Wisdom, folks. Great to hang out with you guys. Appreciate you guys 100%. And your time. I know there was a bunch of questions we didn't get to, but time just flew by. Maybe you and I, Andy, were having a good time, and maybe the listeners weren't, but hopefully you were. And if there is any questions, whack them in the chat, or reach out to us on our social channels. Andy, myself are in the world of Facebook often, and please connect with us in that way. And if you've got anything that you'd love us to bring our view of the world on, when it comes to our little niche, our little neck of the woods in Australia, then we'd love to hear from you. So reach out, connect, and appreciate you guys hanging out with us today for the first 2022 Wealth, Wine and Wisdom, mate.
We're back, mate. It's a big commitment. We're going to be going Fridays strong till the end of the year.
Well done. Well, they say, what's the one? Mortimer, we're back. But, folks, it's a good night from him.
And it's a good night from me.
Good night.
Bye.